Tesla reported earnings yesterday after the close, and shareholders did not like the earnings report. As of right now, Tesla is down nearly 8% for the day, and we can very clearly see this gap down. In today's video, I want to use our post-earnings analysis indicator to understand what tends to happen in Tesla 7 days after earnings, 14 days after earnings, and 30 days after earnings. We'll start with shorter-term data first, just looking at the past 5 years, and then we'll load in our max available data to get an understanding of how these tendencies have varied over time. Now to get started, I'm going to first show you where you can download the post-earnings analysis indicator. For Volatility Box members, this is included for free with your membership, so be sure to download it to follow along. Go to tosindicators.com/earnings, scroll down, and there you'll find the post-earnings analysis indicator along with the pre-earnings analysis indicator as well. There's also a nice guide here which walks you through how to use these indicators, and this is a much longer guide. It's about an hour long and walks you through how to trade pre-earnings, the day of earnings, and post-earnings, so be sure to check it out. Now starting with Tesla, if I zoom out, price action is currently falling into this trend line that's acting like support ever since 2023 began. This is the beginning of 2023, we've touched it once, twice, and we're coming into it a third time. So we're trying to answer the question, does Tesla fill this gap? Does the post-earnings tendency suggest that? Or do we instead tend to see a little bit more bearish activity? Now I have 5 years worth of data loaded to start off, and we're looking at 7 days post-earnings. Now 7 days post-earnings, we can see that price tends to rise a lot more often than it tends to fall. 70% of the time, price tends to rise, and that average percentage is right around 10% in terms of that move. If we look at what this gap fill would be inside of Tesla, that takes us to a value pretty dang close to that 10%, a little bit shy of it, so you have a buffer of right around 1.5%. So the post-earnings tendency, 7 days post-earnings, would suggest for this gap to get filled. We do tend to see strength in Tesla post-earnings. Now if we look at the implied volatility here, implied volatility tends to fall more frequently than not. Now let's up this from 7 days to 14 days and see, well, if we add another week, does this tendency hold, or do we see price gravitate with less of a pattern? Now here, as we added an extra 7 days, so we went from 7 days post-earnings to 14 days, you can see that the price rising tendency decreased from 70 down to 55%. We can also see that our average move jumped up from 10% to 14%, but that's not a huge increase. Instead, if we take a look at the fall instead had a bigger increase here. 10% earlier with the 7 days post-earnings, we were in the 4% range. So now we're seeing that as we go further and further away from earnings, this number doesn't really give us as much of an edge. It's right around 50-50. Now let's see what happens as we up this from 14 days after earnings to 30 days after earnings. Now 30 days after earnings, we can see this number comes right back down to 50-50. The average move, 19.48% to the upside, 11.72% to the downside. So now it's doubled, but if we really take a look at that first 7 day period, that's where we tend to see a lot of that major oomph, if you were to look at it that way. 10% of this 19.48 took place in that first 7 days. So that first 7 days is really what's catching my eye inside of Tesla right now. But this was only using the past 5 years worth of data. What happens if instead of 5 years, we load in the max available data? So now we're using more data points to see, well, does the same pattern hold true? I'm going to start with the 7 days post-earnings patterns one more time. So let's change this to 7, apply, and now we take a look at the numbers up here. Now using the max available data, 7 days post-earnings, price tends to still rise right around 66% of the time. So it's not the same 70, but it's still pretty dang high. It's greater than 50-50 for sure. So Tesla does have that shorter term bias that would allow us to at least build some sort of a trade here looking for a gap fill, or at least the tendency suggests that. Price tends to fall 33.3% of the time, and we can see that same 4-ish% for the fall side. Our average move on the upside, 8.4%. So this has gone down a little bit from the 10% mark, but keep in mind we have a lot more data loaded on. Now, as we up this from 7 days post-earnings to 14 days post-earnings, we can see that number gravitate one more time closer to that 50-50 mark. Here, our average move, 12.24%. our average on the fall side has also increased, though not as much as we saw with the shorter term data. So shorter term, 14 days post earnings, we see a little bit greater of a fall compared to historically. Now if we load in 30 days worth of data here, so 30, apply. Now with 30 days worth of data, we can see in the long run, Tesla has tended to, of course, gravitate towards the upside. If we zoom out, that would make a lot of sense, given that we've seen this inside of the stock price. So this number, with the max available data, means a little bit less compared to looking at just the past 5 years worth of data. It's sort of a duh. Of course, price tends to increase in Tesla over time, or at least price action would suggest that. But it does still help to understand that 7-day, 14-day period, I think, when looking at the shorter term price activity. So coming back to the 5-year daily time frame mark, price action currently coming right inside of this trend line support near that 225 area. So far, it's looking like this candle's turning into a doji. We're finding some support, but remember, we looked at this activity 7 days post earnings, and we do have some room to the upside for a gap fill. Price tendencies tend to support that idea as well, and you would be able to have a tighter stop than I think you typically might be able to inside of a stock like Tesla. So hopefully, through this video, you were able to learn how to use the post-earnings analysis indicator to try and find some nice trade ideas where you're using post-earnings data to help craft your bias one way or the other. Remember, in this video, we didn't really talk earnings, we didn't talk the earnings report, any of that. We simply looked at the patterns, we looked at the gaps, and we tried to find a way to see, well, is there a way that this gap gets filled? Do we have patterns that suggest that? Or do we actually see a lot more bearishness inside of Tesla to come? Take care, everyone. Good luck trading, and I'll see you in our next update.